Crypto is a game of attention. Wherever the eyeballs are, we tend to also see rising prices. There's a lot of correlation between attention and price. Now, Polygon Matic is interesting because the attention tends to be quite low long term, yet the market cap is very high. Let's have a look at why that is the case. Let's have a look at whether or not it makes sense to buy POL or the Matic token right now. Now, I am covering Polygon Matic regularly on this channel. And the very first video was published 1,416 days ago. So this channel has been around for a while. And the video performed pretty much according to average, right? The average video is here, this gray area. The recent video, published only 17 days ago, initially performed to average, but now it tends to outperform because of search traffic. People start searching for Polygon Matic again. Yet on CoinGecko, Matic is not among the most viewed cryptocurrencies. That's for Dogecoin and Pudgy Penguins and Ondo Finance. I'm talking about the Matic token and the POL token interchangeably because it's actually the same thing. Those two tokens can be migrated over. Thus, the two prices, this is now POL relative to Matic, just move in tandem all the time. The conversion is 1-to-1. There has been quite a bit of drama around the Matic project because initially the token underperformed quite a bit because of token inflation. New tokens hit the market, the team paid itself, and thus because of that underperformance, people didn't really like to invest into Matic long term. Yet there was the promise of a maximum supply, and that can be seen over here. This is the tokenomics of Matic, and we started out with a circulating supply of 3.2 billion, and that moved to 10 billion. And everybody thought we will stay at those 10 billion forever. But then came the migration from the Matic token to the POL token, and suddenly POL became inflationary again. Tokens went to validators and to the community treasury. Or in other words, users of the blockchain and the internal team, right? What else means community treasury? And so the long-term negative trend of Matic couldn't get broken. This is now Matic relative to Ethereum. And initially there was a lot of hype around Polygon Matic because it was one of the very first layer 2 scaling solutions on top of Ethereum. Ethereum has very expensive gas fees. It's very expensive to transact on Ethereum. And Matic was the first solution to the problem. Now there are a lot of layer 2s. There's Optimism, there is Arbitrum, there is the base chain. Matic was the first. And that's why it got all the attention at the beginning. But now with the bad tokenomics and with increased competition, we have a long-term underperforming trend. Since February of 2023, so in the last 2.5 years, we saw Matic underperform Ethereum by 93%. This is a logarithmic scale, so it doesn't look as bad. But once you go on a linear scale, this is actually how that looks like. So the big question now is, does it make sense to buy this bottom now, right? Crypto is all about buying low and selling high. And obviously we have to buy tokens when nobody wants to buy them and then hope that maybe attention comes back again and that we can then sell for higher. Is this a good strategy for Matic or for POL? Let's have a look at valuations. This is the POL token and it's got a market cap of 2.2 billion. But we've also got Matic tokens and that's got a market cap of 350 million. So when we add those two together, we get to roughly 2.5 billion. And here's an overview of Ethereum layer 2 scaling solutions. If we don't take 2.2 billion, but 2.5 billion, we're already at number 2 of all of those layer 2 scaling solutions. Polygon Matic is still one of the most expensive layer 2s. Only Mantle is larger, but Arbitrum is cheaper, Optimism is cheaper, and of course all those smaller chains are much cheaper as well. The question is it justified that Matic is that expensive, that its market cap is so high? Yes, Matic already underperformed, but still, in the grand scheme of things, it's still quite high. Here's the total value locked on the Polygon chain over time. It peaked at 10 billion. We are now at 1.1 billion. Here's the Matic total value locked since migration measured in POL. So here we actually do see some growth. Here's the decentralized exchange trading volume measured in POL. Again, we do see some growth. Also, the stablecoin market cap tends to grow. It looks like the Matic network has found its own niche. Ethereum is about decentralized finance, Solana is about Memecoin trading, the Matic network is about betting markets. And that's mainly Polymarket. Let's have a look at what's driving the price short term. Here is the funding rate of POL. It's positive, so it does cost money to bet on rising prices of POL. despite the long-term underperformance. Here is the open interest over time on Matic. So how many bets are currently being made on Polygon Matic? It's actually not that large. There's only 100 million roughly of open interest. Given the market cap of Matic, that's really, really low. This number matters because there is correlation between the spot price and open interest. If open interest was to suddenly shoot up to 500, 600, 700 million, then of course the POL price can go up as well. We do see a few liquidations among the shorts as the price is rising a bit, but in general the perpetual futures market is in an equilibrium. Really, the tokenomics aren't that bad. The token inflation isn't too bad. But the market cap, the relative valuation of Matic to other layer 2s is still high. And that's a problem. If we see another 30, 40, 50% drop of Matic relative to Ethereum, then it might make sense to buy if we see continued adoption of decentralized finance, right? If the total value locked and the number of stablecoins, etc., if that continues to grow and Polygon Matic is only half the price, it might make sense. But right now, with a market cap of 2.2 billion plus 300 million, it's not yet cheap enough to justify buying into the token. And so the current momentum is likely going to continue for a while. I don't have a crystal ball either, but that's how I interpret the data, right? Short-term leverage could push up the price, but also long-term adoption once the market cap is a bit more reasonable. A clear shift in crypto has happened. Bitcoin is close to the all-time highs, yet the interest, the search interest, the retail interest is very low. Bitcoin gets supported because of Wall Street purchases, not because of purchases by retail. Nobody is searching for crypto or for Bitcoin anymore. The market is consolidating. The capital is concentrating towards a few winners. That's usual in any market, right? The vast majority of assets, the vast majority of players tends to go down and there are a few winners. The winners take most. What we see over here is the performance of the smaller altcoins in the last year. And Bitcoin doubled in the last year, but most altcoins went down. And here's the thing, most people try to find the few assets that still do okay. They try to find the next Dragon coin or the next go-to. But how likely is it to get proper allocation to those assets and not pick any of those other red assets and burn all the capital? The odds are clearly against us. So this approach is clearly problematic. It's not easy at all. The approach of timing the macro environment is also not that easy. This is Bitcoin over time, right? And of course, it does make sense to buy Bitcoin after it has dropped 70 or 80%. That's the best time to get in. We are very far away from this, unfortunately. And the issue is also nobody wants to buy when we are depressed, because there's always a convincing story why Bitcoin will go to zero, why crypto is doomed, while nobody will get into the market again. We are far away from this, but in general, right, riding the macro is also not the easiest. Trying to find the next 10 or 100x altcoin is a problem. Trying to buy Bitcoin when it's extremely depressed is also not that easy. But I do think there is an approach that's comparatively easy, where the odds are actually in our favor, not against us. That's by using the market structure to our advantage. This market structure here, right, that all of the altcoins go down all the time. Why do they actually go down? The answer is token inflation, right? It's new tokens that hit the market. It's the insiders, it's the venture capitalists, it's those paid influencers that get tokens, that maybe get them unlocked over time, that then simply just dump on retail. That's why all the retail investors lose over time. They simply get dumped on by the smart money. Why do venture capitalists like Andreessen Horowitz like crypto? Why do they invest in it? They do this because they get into the projects very early. They've got a very tight network. They've got a lot of capital to play with. They get in early and then they sell off and dump on retail. Or why are there so many compromised influencers that take money or tokens of a project to promote a certain cryptocurrency? This here, for example, is BitBoy Crypto, right? A dedicated review. He asked $35,000 for that. The reason is simply conflict of interest. It's profitable to do this. I, by the way, never took any money from any crypto project. I also will never take any money from any crypto project. I want to make my money in crypto in a different way. And that is through building skills that help us to distinguish the noise from the actual signal. And again, it's all about taking that market structure to our advantage. There is a way to make money with it. When a token like Balancer inflates in supply, when the supply is growing and growing because the users of the platform get tokens, because the early investors get token unlocks and they dump on retail, when something like this happens, then as a consequence, the token of course does worse compared to Bitcoin, Ethereum and Solana. So this is now Balancer relative to Ethereum, and it just constantly is going down. But we can just flip this on its head. When we go long Ethereum and short something like Balancer, we see a chart that's not possible to achieve with any single bet on crypto, right? This is very little volatility and very constant growth. This is now a linear chart. Here's the same on a logarithmic chart. Balancer is not a cherry-picked example. The overall altcoin market works like this. This is the unlocks over time for all of the tracked tokens on this website here. So the website is Tokenomics.ai. This is the weekly unlocks across all the tracked tokens, and it's above 600 million per week most of the weeks. So if there's not at least $600 million coming into the crypto space in a particular week, we see the altcoins do worse than Bitcoin, Ethereum and Solana. This is how those kind of charts develop. This is why we see red everywhere. This is why the strategy works so well. Again, instead of trying to find the needle in the haystack, it's much better to bet on the overall structure. When most people cash out, when Andreessen Horowitz makes money by dumping on retail, why don't we just get ourselves on the same side? I'm following this strategy for almost 4 years now. What we see over here is in light gray the performance I would have gotten had I just dollar cost averaged into Bitcoin. But instead I did the relative valuation plays that I just described, and that's why I got the black line return. So this comes from an Excel sheet of my personal portfolio. This is monthly data and it's got now 45 data points roughly. I started this strategy with decentralized finance, so with borrowing and lending platforms like Aave or Venus Finance. But recently I do this with perpetual futures. So this started 2.5 months ago. I started with 40K and now it's at 60K almost. So that's almost 50% return in less than 3 months. I do not think that this will continue forever at that pace, but I do think in general this is a money-making strategy. The strategy has already worked for almost 4 years and it also works with leverage on the perpetual futures. And so basically we just flip this thing around, right? Everything that's red over here becomes green. Everything that's green here becomes red. The odds are finally in our favor. We are not gambling on random meme coins, lose everything. Instead, we make money the same way how the insiders and the venture capitalists make money. We make money when the dumping happens. And so I understand the problem, right? If you followed other people like BitBoy Crypto and you trusted them and you've lost your money with them because you just followed whatever they said, then I do understand if somebody else comes along and says, follow my approach, that it makes sense to be somewhat skeptical. And so I was thinking about this. How can I prove that I'm very certain that this actually works? Here is the offer. Watch 2 tutorials in the premium membership. So this is one of them. It's half an hour in length, how to use perpetual futures on Hyperliquid to bet on relative valuations. And then there's the second video over here, which is at least equally as important. Risk management with relative valuation bets using Hyperliquid. If you don't know how to manage your risk, you've got a big problem with those instruments. But yeah, the offer is to just watch those 2 videos. Once you've done this, then I don't expect you to start trading by yourself already and find the best opportunity. This is only something for the people that have been around for a while. This is, by the way, a few trades that have been made by other members that are shared over here in the chats. I think it is much better to do a little bit of hand holding, as in I will share my favorite trade that you can enter with that strategy. So you know how to use the platform, you know how to set up the positions. I will share then what asset I believe has the most likelihood of performing in the near future. You will then enter the position, hold it for a month, and if you don't make any money, if you're actually in the red with that position, I will simply refund the premium membership for free to you. You don't have to pay anything for premium if you're not making money with that first trade that I'm sharing with you once once you enter. Of course, besides that very first trade, I'm also sharing all the other trades that I opened. This, for example, was WorldCoin. WorldCoin has terrible tokenomics as well, and it underperformed Ethereum very consistently. But one thing after another, let's do the simple stuff first. Let's set everything up. Let's open the first trade, make that first profitable trade, make the first gains, turn ourselves around from being a constant loser to actually start winning. And then we can take it from there and become a bit more complex along the way. The premium membership is currently $125 per month. But again, I'll refund this in case you don't make money with that first trade. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.